The blue line is diesel fuel prices, which we'll touch on again here when we talk aluminum. But admittedly, over the last several months, basically since, let's call it April, we have seen crude oil and refined products come off their highs to a fairly large clip. Let's call it 20%. That should help to feed through to lower CPI data, at least for now. While we're on the topic of crude oil and refined products, I think it's worth noting that in the last several days, some OPEC members, so the oil producing regions of the world, their key heads have come out and said, and it's a little cryptic how they said it, but they basically said financial markets, so basically futures and things that are traded on the exchanges, seem to be deviating a little bit from what they see with physical supply demand markets. Now, I don't know if they're alleging that maybe somebody's behind the scenes shorting futures markets and trying to make prices come down, but they did kind of give this hint that if in the event that doesn't correct, OPEC will have no issue cutting production. So kind of goes in the face of what the Fed is trying to achieve, which is bringing inflation down. Here's OPEC basically saying, well, if we see too much deflation in energy markets, we'll actually take production away from the market, which is kind of the opposite of what I think we want to see, or what the Fed would want to see if they're trying to bring prices down. So for now, we are seeing energy prices soften on crude oil and refined products, but that could change. And worth noting, OPEC does have a fairly important meeting coming up, I think in 2 days, so October 3rd. Now, while crude oil and refined products are softening a bit over the last several months, the other side of the energy equation, and I'll call this the kind of heating of things, or the making of things. So we're talking coal, natural gas, electricity. Those markets, unfortunately, have not cooperated. And you can see that here. We've talked about this chart in the past. The blue line is going to be US natural gas prices, which it doesn't look like it, but $9.30 for US natural gas is very high relative to history. It's basically the highest level in 11 or 12 years. So we're seeing the inflation already in the US, but comparing that to what they're seeing in Europe, and both of these are in US dollars per MMBTU, so British thermal units. The price in Europe is about 8 times higher than what we're seeing here within the US. So when we start to think about the ramifications of lack of energy security, the war going on Russia-Ukraine, any type of lever pulling that happens even within OPEC, these are certainly having more dramatic impacts in places like Europe who have less energy security. And this is one of the main reasons why I think on a relative basis, the United States and the United States manufacturing sector is going to be much, much better off. We still might feel some pain, but if you compare that to what they're seeing in Europe right now, it's pseudo panic. And I don't mean to be too hyperbolic, but you'll see here in another slide what I mean by panic. This is the price of electricity in Europe. So we're looking at France and we're looking at Germany. It's a 5-year chart, and what we're looking at specifically is going to be base load 1 year forward energy. The idea there is basically to pull an index that's normally somewhat stable. So you can see 2017 to 2020-21, you basically had power prices right around $40 a kilowatt hour. We're now looking at prices in Germany and France, basically the 2 big manufacturing hubs of Europe, with electricity prices more than 10 times that historical average. So whether you're trying to make something or heat your home, or pretty much anything you want to do requires turning the lights on, heating your home, or melting a product, burning a product within manufacturing. And what's kind of crazy is, as we look at this chart, you're seeing those jolts up. If we ran these charts 3 days ago, they would have been showing prices double what we're even seeing right now. So it's a pretty crazy situation over there. I don't want to spend too much time on this, but I will say there will be, or there very well could be, knock-on implications of aluminum curtailments. We're already seeing some of that. But if this continues as we roll into fall, we roll into winter, the higher electricity prices go, the more difficult it is to make aluminum profitably, to make zinc profitably. But admittedly, this isn't just about aluminum and zinc. It's going to have knock-on implications to individuals heating their homes and making anything, because you can't really manufacture anything without relatively inexpensive natural gas. So I don't love what this chart potentially entails as we roll into colder months ahead. And admittedly, I think I'll reference Jurassic Park here real quick. Chaos theory, the idea of a butterfly flapping its wings somewhere. When you've got energy markets that are this tight, the smallest little tweaks in supply, the smallest little tweaks in supply chains can really cause very dramatic knock-on impacts, because the supply-demand balances right now within energy are such that you get one fire at one facility, you could see prices double or triple, or just you can't even get it at any price. So again, I don't want to belabor the point, but the energy situation is really, really bad within Europe right now. A warmer winter could certainly help alleviate that. But I guess the one other thing I would say about this is we're talking about Europe here. This is a set of developed nations. If we're talking about Europe having these types of issues, we're not seeing a lot of headlines about it, but you can imagine that second world countries, third world countries are likely having these issues and then some, because if prices are doing this in Europe, they're probably unavailable in third world countries. And I almost wasn't going to provide this chart because it's kind of there's new news about this in the last couple hours. But what this is looking at is the flows of natural gas through Nord Stream 1 pipeline. So this is the pipeline taking natural gas from Russia to Germany. You can see that September through, let's say, June, it was relatively steady. This is in million cubic meters of natural gas. You're probably noticing, well, what happened in July? Well, in July, and I will admit, every single year right around mid-July, Russia does take scheduled maintenance where they bring production down, and production literally goes to zero for a short period of time. You can see it was for a short period of time, but it hasn't recovered anywhere near to the levels of where it was running, let's say September through June. Is it actual maintenance, or are they playing games? I have no idea. I don't really want to speculate on that, but it is worth noting that just this morning, and this data is not updated for that, just this morning they announced another round of maintenance. Again, I don't know if that's them trying to remind Europe that, hey, we have our hands on the spigot, or if this is truly, a temporary maintenance. But what I will say, admittedly, is that the latest piece of data suggests that come Saturday, the maintenance should be completed and we should start to see these flows ramp back up. We'll see. We're going to keep a close eye on that. But obviously, given the tightness of energy within Europe, this is a very important topic as it stands here today. And then lastly, a little bit of levity, a little bit of lightness. The US dollar, which has been incredibly strong over the last year and a half, it has finally gone beyond parity with the euro dollar. Parity basically just means it went to one to one. It became equal to the euro. Hasn't happened in a while. And I found this tweet kind of hilarious. So I don't know who Mr. Cuddles is, but I wish I came up with this joke on my own. Since the dollar has gone to parity, his comment is, it's now called soccer. It's no longer football. Nothing we can do about it. The good news for anybody listening to this podcast here, if you're heading to Europe, it's gotten a whole lot cheaper in the last year and a half. So you may not have any lights on in your cafe, but you can certainly go there cheaper right now.